You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is real estate expert and fellow podcaster Clayton Morris. Clayton is former Fox News anchor who left the #1 cable news show in the world after achieving financial freedom through real estate investing. He now devotes himself to helping others buy their first rental property, build passive income, and achieve financial freedom through his turnkey rental real estate company, Morris Invest. After some epic failures, he's learned how to build a meaningful life, and he shares these lessons on his top-rated podcast, Investing in Real Estate with Clayton Morris. And so in today's show, we're going to pull back the layers of Clayton's business, and we're going to take a look at how he's been able to build a portfolio of cash-flowing assets, including single-family homes and multifamily apartments that have allowed him to live a lifestyle that most only dream of. Before we get on the show with Clayton, I want to run through just a few quick updates with you guys. First and foremost, if you guys are just listening to the show for the first time, I want to welcome you. But more so, I want to tell you a little bit about what I do, what our business is. And if you didn't know already, we specialize in mobile home parks. So as I mentioned, Clayton's in the single-family home and the multifamily business. We specialize in mobile home parks. And I'm only telling you this because we're seeking new mobile home parks to purchase. So if you guys are out there on the hunt, whether you're looking for shopping centers, multifamily properties, more single-family homes to buy and flip or to keep or whatever you're doing out there in the field, and you run across a mobile home park that looks like a good opportunity, as long as it's a 60-plus space in size or larger, please get a hold of me. Let me know about it. I'd love to pay you a big fat finder's fee, or we even have the opportunities of potentially partnering together with you so we can raise the capital and help you take down the deal if that's what you're looking to do. So if you got an opportunity you want to speak about, shoot me an email directly to kevin@kevinbuck.com. We can handle deals upwards of $25 million. So not just single deals, but also portfolios. In fact, we actually have 2 deals that we're working on right now that were brought to us by listeners just like you that wound up paying nearly $200,000 in referrals fee on. So how would you like to put $200,000 in your own pocket? If so, think of me when you come across that next opportunity or what seems to be an opportunity. Next up, guys, I want to provide you an update regarding our mobile home park fund. If you are a regular listener, then you know that we just recently closed out our very first successful Reg D 506C offering, and we couldn't be happier with both the parks that we purchased as well as the many investors that we've had the pleasure of partnering with in that first fund. Unfortunately, with the good news, there was also some bad, and what I mean by that is there were a number of you who had shown interest in partnering with us, but you weren't able to get into that very first fund prior to us shutting the doors. Well, I got some good news also. Me and my team, we've been working really hard behind the scenes rolling out fund number 2, and we expect to have it ready to go in the coming months. So right around middle of Q2 is what we're shooting for. And so if you missed out on that first fund and you have an interest in partnering with us, be sure to go over to our website, sunrisecapitalinvestors.com, and create a free account inside our investment portal. And what this is going to do, it's going to place you on our first to know list for when that fund number 2 rolls out. And I'm guessing that based on the demand for that first fund and how fast it filled up, we're expecting to fulfill our subscriptions very quickly when we roll out number 2. So make sure you get in there, get on our first to know list, and we'll look forward to chatting with you when the opportunity rolls around. And lastly, guys, if you happen to be in the Tampa Bay area, I'd love to meet up with you if you have some extra time. I always love meeting others that share a passion for real estate. So even if you're just a beginner and you don't own any property yet and you've got some free time while in town, be sure to look me up. Again, you can shoot me an email directly. My personal email address is kevin@kevinbuck.com. Let me know when you're coming, and we'll see if we can get our schedules to coordinate. So without further ado, guys, I'd like to welcome our guest for today's show, Clayton Morris. Clayton, how you doing, bud?
I'm doing great, Kevin. How are you, man?
I'm doing awesome, man. I'm doing awesome. I'm looking forward to diving into your business and learning more about you, man. So you're a top podcaster. You were a news anchor for the #1 cable network, and so you've been in this radio thing or this podcast thing for quite some time. You've been out in the limelight. Well, I want to learn more about that and your background. And for those that don't know who you are, Clayton, or haven't listened to your podcast, what I'd love to do is just so we can get a basic premise or foundation to start from is just take a few minutes and expand a little bit on that background I gave you. I mean, I gave just a little taste of who you are, but I'm sure there's a lot more to it. So take a few minutes, tell us a little bit more about yourself.
Sure. So, I mean, I grew up with, I'm a guy who grew up with a lot of negative associations with money, in my house, and a lot of memes about money. Money doesn't grow on trees. We're not the Rockefellers. We can't afford that. So I came from that sort of paycheck mentality family, and didn't understand real estate at all. Didn't know that it was a mechanism for me. And I grew up wanting to, be in television. I would sneak downstairs. My parents thought I was asleep, and I would watch a lot Letterman and Carson, and I wanted to, host my own show one day. And graduating college, moved out to California in 1999 and started working as a production assistant at Good Day LA, and just started my TV career there as a production assistant, and moving up to Montana as a news reporter for CBS News, covering the governor, then all over the country, and West Virginia, Ohio, and the whole time, moving all over the country, I was renting, I'm just paying somebody else money, right? And I had read Rich Dad Poor Dad. I think it came out like 1999-ish, somewhere in there, and didn't quite understand how that was all, but it was a paradigm shift for me, and just realizing that I grew up with this sort of, poor dad philosophy on the way that you build wealth is, you just work hard, you hope for a raise every few years, and you put some money in some savings account, that rainy day fund, like in a drawer in case you have to, get your car tires changed or something. And that's it. Like that's how you create security. And so, all around the country, I was going into debt, living on credit cards, and it was just miserable. And eventually, finally, I made it to Philadelphia, and then on to the network, and spent 10 years at the Fox News Channel, anchoring their you said it, their number one morning show, and I got to do the weekend version of that show, which was Fox and Friends. And I just retired, and back in September of last year, I said, I had reached financial freedom from real estate. I was tired of waking up at 3 a.m. to go in and talk about, God knows what, Congress, Trump, just stuff that I don't want to talk about. And
sure.
Left, and now I devote myself, my wife and I devote ourselves to, helping others learn how to build financial freedom and build wealth. And for me, it's just the fact that, even my co-hosts who are, they're making great salaries, they couldn't believe that I was like throwing in the towel. I'm just saying I'm done. I'm just, I have 2 more years of my contract. I'm done, because even at that level, there's still so much fear associated with that paycheck, that's being thought of as a safety net. So that's where I'm at right now in this sort of transitional period of my life, and I'm really excited about it.
Yeah, well, that's exciting. And, it's interesting that you say that, the fear that's even in those high income earners, those high wage earners, and that it's still there. But, what I've come to find, Clayton, is that even those wage earners that are, in the 6-figure range, high 6-figure range, if they have that savings mentality, they tend to end up spending, like their lifestyle consumes what they make. And so they never really get to a point to where they've got that huge nest egg, or they've made those intelligent investments that will allow them to do what you've done, which is purposely, voluntarily throw in the towel and say, you know what, I've got a better way. So
exactly. We all expand in that way, and so you get that raise, and you don't save any of it, and by the way, savers are losers anyway. So, you're saving money. Good. The value of that dollar you put in that bank account is going to be worth less as the government prints more of it. So, it's not a smart strategy.
So I want to talk about the kind of the light bulb moment. Obviously, you read Rich Dad Poor Dad, and it really changed your path in terms of you want to get from that savers mentality, and you look to real estate. I want to talk about the first deal that you purchased, your first investment property. And I'm assuming maybe the first one, or maybe it wasn't. That wasn't the light bulb moment that said, you know what, there's something to this. I need to buy more. But let's talk about that first one. Then I want to learn about the light bulb moment when you're like, there's something to this, and I need to fuel this growth so that I can voluntarily, make a decision to leave my corporate job if I so choose to. So tell me about that.
Yeah, it's a great question, because there were 2 specific instances where this happened. And so the light bulb moment of me getting into it was one thing, and then the light bulb moment of me seeing how this could change my life was the other. So the first moment was, I'm working at Fox, and I couldn't take much time off. I was trying to finagle a little trip. My wife's from San Francisco, so we flew out with the kids. And I was going to go to New Zealand from there to visit a friend of mine who's one of the great photographers of the world. He invited me to the South Island of New Zealand, come to my house, we'll go out and shoot photos for 5 days and have a blast. I said, I can't pass this up. My wife said, go. She was great. She had her mom to take care of the kids with her and her dad. So it was all good. So I'm on the 16-hour flight from San Francisco to New Zealand, and I'm sitting there, and after 15 hours, I wish I would have spoken to these people beforehand, but 15 hours, you're waking up, you're kind of groggy, you're getting ready to land, and I get to talking to this couple sitting next to me. They're in their 50s or mid to late 50s, I think, and they weren't retired or anything, and they said, oh, how long are you going to be in New Zealand? And I said, oh, I'm going to be there for 5 days, just I have to work, I've got to get back. And I said, what about you guys? How long are you going to be in New Zealand? They said, oh, we'll be there for 2 months. And I said, 2 months? What in the world do you do that you can go to New Zealand for 2 months? And he just looked at me nonchalantly and said, oh, I'm a real estate investor. And I said, what? And I had already knew that this was this was going to be the vehicle that would get me there, right? This somehow. And so I just pulled out a pen and paper and I just picked his brain for the next 40 minutes on descent. They're telling us, put up your trade tables, get ready, get all your stuff together. And I'm like, wait. So how do you do this? And he just taught me his formula. He's like, oh, my partner and I, we buy, in the Midwest, we buy in affordable areas where we can bring value. We don't, we focus on C and B neighborhoods. We stay away from A. A are the worst. You're going to have the worst tenants. You're going to have the biggest fluctuations. Those are the people that lose their jobs. He just gave me his formula. He's like, I focus on ROI. He said, whatever you do, don't fall in love with real estate. He said, I don't frankly even care about the house. He said, it's 4 walls and a roof. Take care of the main systems in a house and you won't have repairs to worry about for 10 to 15 years. And I said, I got it. And I literally got back. I landed actually in New Zealand and talked because I didn't even have cell service. I talked over FaceTime audio to my wife, and she could hear every other word. And I'm like, she's like, how's New Zealand? I'm like, I don't want to talk about New Zealand. I want to talk about what we're going to do. So I literally got back and I made my first 2 purchases within a month of getting back and targeting some areas in the Midwest that I wanted to focus on, almost in the same neighborhood he told me that he was in. And so that's where I started buying my first 2 properties. And so that was the first part of your question. The second part of the question was, okay, now I've purchased these these properties. I think one was a short sale, one was a foreclosure. It was back when you could even find those, 9 years ago, whatever. And so I probably overpaid for them, right? Because they were on the MLS, so they were, publicly, they're out there with a realtor. So, hey, but you live and learn. And I over-upgraded it. I did extra things to it that I wouldn't do today, which is fine. You live and learn. Mm-hmm. And the light bulb moment for me was, because at this point it was still like a petri dish. It was a test bed. I didn't know because I tried so many different things in my life. Was this going to work? We were at the gym, my wife and I, and she gets the email from our property management team that says, hey, good news. Both of the properties, we just got a qualified candidate. They're moving in on this day, and it's now rented. And she came over to me, and I was on the treadmill, and I got off, and I just started crying. And I said, I can't believe it. We did it. We finally did it. And that was to me the light bulb moment was once you get that first rent check. Mm-hmm. And then it's like the proof of concept.
Yeah, because it's not real at that point in time. Right. I mean, you've heard other people do it, but it's not real for you until that first rent check really comes in.
Yeah. So that was the moment. I mean, that moment, that first rent check, or that we got that first qualified candidate in the property, and I've never looked back, and I've just rinsed and repeated for many, many years until I was able to hit financial freedom and leave.
I want to talk about the progression from those first 2 properties that you purchased up to where we are today. I mean, I'm sure it wasn't all rose beds and chocolate covered strawberries. I mean, it wasn't easy along that path. You probably hit roadblocks, you hit hurdles that you had to get over. Speak to me about maybe one of the biggest challenges that you faced as you scaled, because that buying 1 or 2 properties is obviously challenging, right? It's got its own set of challenges, but scaling a business, scaling a real estate business to where you have a portfolio of income properties is a completely different ballgame. There's many different challenges associated with that versus just owning 1 or 2 properties. So speak to me about those a little bit.
So for me, the biggest challenge, I think the biggest mistake investors make, and this is my personal opinion, but I've seen it repeatedly, is they focus on the mechanics of real estate, right? So they think that there's a one-size-fits-all approach, and they think, okay, and for my wife and I, we did it like 80 different ways to scale. We borrowed from we took a loan out from my 401k. We used some money from our self-directed account. We used some private money. We had some cash on hand. We had, some stocks that we converted. We had a life insurance policy that we got rid of because it was, sucking us dry. Like we did all sorts of different things, but I think the thing that people get so caught up in is the mechanics. And I like to think about the be, the be, do, and have. And so most people just skip and go right to the do. Like I'm going to follow paint by numbers, exactly how Kevin did it or exactly how Clayton did it. And they skip over the first most important step, which I think is the be. Why are you doing it in the first place? Why are you becoming a real estate investor? Mm-hmm. Why are you purchasing properties that are going to be performing for you as an income producing asset? Is it because you want to not commute 2 hours to and from work every day? Is it because, you have a sick child that demands more of your attention and you want to be there for that child? Everyone has that why, but most people skip over it and they don't have a clear goal. So then they hop around from, I'm going to do mobile home parks. I'm going to do single families. I'm going to do billboards. I'm going to do self-storage units, and they go in 80 different directions without any success because they do 80 different things. So I think the thing that changed my life, because I got those first 2 properties and it wasn't sky's the limit from there. Like I got those first 2 properties and my wife had come to me one night and she said, we can't pay our mortgage this month. And here I was, a network news anchor, like at 30 Rock in Manhattan. It doesn't get any better than I'm very blessed that I got to this position. But I'm sitting there in tears with my wife because we can't pay the mortgage. So I had to go through my closet and sell some crap on Craigslist, an old camera, some jeans, just to literally pay our mortgage that month. And I said, what are we doing wrong? And we didn't even know our numbers. We didn't know our expenses. We didn't know where we were going. We had these 2 income producing properties. And my wife said, she said to me, these 2 properties produce, $900 a month respectively. So, $1,800 a month. Consistently for us. What would it take so we don't ever have to have a month like this ever again for us to have those properties covering our monthly expenses in our life? And I said, that's it. And I just jumped up with a marker on my whiteboard and I'm like, yeah, that would be financial freedom. What would financial freedom look like for us? And we just reverse engineer and kind of came up with our freedom number. And it's I didn't stop. I was like, okay, if we got 4 of these, 5 of these properties, we came to a number. We needed 12 properties to cover all of our expenses to live financially free. So that I think is how you start to scale. You've got to know your numbers. You've got to know where you're going. You've got to write that number on your refrigerator. You've got to put it on your computer. You've got to put it on your whiteboard. And you and your partner need to be on the same page about it. Otherwise, you're never going to get there. Mm-hmm.
It's your roadmap. I mean, if like you had mentioned, there's too many people worry about the mechanics. I want to do it just the way Clayton did it or the way that Kevin did it. And really, you need the roadmap first, and don't worry about the mechanics because there's a million and one different ways to make money in real estate. You worry about that next, but you got to get the why down first. So I think that's incredibly important. So talk to me about, so your big hurdle, you mentioned you guys didn't know the numbers, but as you started growing and acquiring more properties, what were some of the other challenges you faced? So you learned your numbers, you got your why knocked out, and now you guys are growing. You're going out and buying more properties. What's the next hurdle, and how did you overcome it?
It's a great question. The next hurdle was, distraction. And so many distractions present themselves that, I remember a boss one time saying, some producers were having a discussion about what they should do. And this boss, who was very smart, said, stop. Just play the hits. What do we know works? How do we, what has worked and what will continue to work? Stop trying to reinvent the wheel. So what my wife and I realized is that if we stick to the one thing instead of being distracted, Because, as you grow, I mean, deals, you get deals sent to you all the time. I get deals sent to me all the time. There's things that float through your desk. You should try this strategy. Let's do,
shiny objects, man. Everywhere.
Oh, yeah. Shiny object syndrome is the name of my game. I grew up like, trying to do all these get rich quick schemes, on late night television, Don Lepre. I don't know if you remember that, just like take out these tiny classified ads. Remember that? Those infomercials and like, you're going to get rich on this. Like, me and my buddy Mike, we tried all that crap growing up. And so shiny object syndrome is real, and especially for men, it's very easy to lose focus and just kind of try to chase after things if you don't have a good roadmap. And so for my wife and I, we had acquired a bunch of single-family properties, and then we were starting to get distracted by other stuff, and we got off course. And we said, why are we getting off course? We need to go back to what has been working. And we decided to get our focus back and go after and continue that. And it's not until, this year where now we've built up a very large portfolio that we are moving into multifamily. Our goal was we wanted to get to a large portfolio before we started to go into, 8, 10, 15, 20, 60 unit apartment complexes and really dive into that strategy, which is what we're going to be doing over the next few years. Okay,
that's really exciting. And that normally is that's a normal transgression from single family into multifamily. That's the exact path that I took. And I think that it's much more palatable to start with a few single-family properties, understand the landlord business. Not that I love the landlord business. We don't manage our own. Well, we kind of manage our own properties, but I know a lot of folks outsource it to a third-party management firm. But you still need to understand the mechanics of actually managing those properties, the legalities behind it, the monthly and operations, day-to-day operations and such. But I want to talk about your transition into multifamily, because I know you just recently bought your first multifamily property. How did that differ? Like, compare it to buying that first single-family property or a single-family property to this multifamily property. What are some of the differences that you've noticed? And I know financing's different. Managing the property might be different. But what are some of the other aspects that are completely different than the single-family side that you were so used to?
Well, it's a great question because, with multifamily, I know, the mechanics are different. You're dealing with like really trying to add value to this property. Okay, we're going to separate meters out, or things that I just never really cared about before. They kind of live on an island too. As you know, like a lot of these multifamilies, there might be like a 10 unit that's in your neighborhood. You drive by it all the time, but it's not near any other 10 units. It's just there.
Right.
And so for me, it was like for me, it's almost the esoteric part of it than the actual physical structure of the property that was surprising to me. It was that leap of faith. To me, like multifamily or large commercial or even small commercial seemed very adult.
Intimidating, right?
Intimidating, yeah. And like above me.
Very adult. Yeah, like you need to wear like a suit and tie to be buying this type of property.
Right. Like, this isn't for me. I'm just a little kid playing in this little sandbox over here. And that's just total garbage. It's just, it's a limiting belief. Again, it comes back to those memes that, I'm not good enough to be in the room with these people. And that's just total garbage, There are a lot of people who, buy multifamilies that, don't have a college degree. What are you talking about, Clayton? And that's the kind of stuff that I would say to myself. And so I think that was really the most surprising thing, regardless of like, is it separate metered? Is it, where's it located? Okay, it's near that school. It's near this college. That's great. What can we do? How much value can we bring to this property? And, what are the rents going for in this area? Can we even add more value to this property by adding a sort of a great room as you walk into the property? And will that entice more tenants, increase? So those things never occurred to me on single family. I know what I'm doing with single family. And I know how to zero in on my rents, and I know exactly how to keep like long-term tenants and all of those things. This is just it was a different animal. And hey, we're still learning, we're still in the rehab phase on it. So, but as we acquired, that's a smaller one, 6 unit, nothing compared to what you guys, do on the larger ones. But I think also, surrounding yourself with mentors who understand larger multis. I just kind of kept them away from me because again, I felt like maybe unworthy of them. You know what I mean? Like Like, no, these guys are swimming in a different pool. Like at my gym, we have two different like hot tubs. When you come out of the big pool, there's like two, and one of them seems like it's always closed for maintenance. But there'll be like these two guys. They're always kind of talking after they work out, and they're just loud. And I always choose to go in the opposite spa because I just want to be peaceful after my workout. I want to hear them talking about whatever it is they're talking about. And so that's kind of how I looked at it. Like, I'm going to go to this pool over here. It's my little comfort pool. Well, these multifamily guys are hanging out in the hot tub over there.
Oh, that's funny. So what's your roadmap or your plan look like moving forward? So you're rehabbing this first unit here, and obviously you figured out the roadmap for the single family side. And so what does that look like for the multi? Like, what does your future look like over the next 1, 3, 5 years on the multifamily side? How are you going to accomplish your multifamily goals?
Well, we have a large audience, large network, and my goal now is infinite returns. So I want to have none of my own money in the deals as I move forward. That's my goal. Mm-hmm. So that's sort of the white whale, right? But for so long, I put almost all of my money in my deals. So I own everything I own free and clear, And so now with all of the stuff that I'm doing going forward, it's going to have none of my own money in the deals. And that's how I'm structuring things as I move forward. So, it is intimidating because it requires a boatload of legwork. But that's what I'm doing going forward.
Okay, fantastic. Well, you've been at this how many years now? When did you buy your first property? What year?
2006.
Okay, so what's that? Quick math. 12 years? Right? Yeah, 12 years. 12 years. You've been at this 12 years. You've gone through lots of different changes in the real estate market. Financing was completely different back then when you were getting started. You could pluck deals off the MLS. Now you really can't. So lots of different changes over that period of time. But you've learned a lot along the way. You made a lot of progress, had a lot of successes. If you could go back in time now and speak to Clayton back 12 years ago, younger Clayton, back before he had less gray hairs, Clayton. You probably don't have gray hairs.
I do. I have a
few. What advice would you give yourself back then?
My first advice and my biggest advice would be know your why. What are you doing? Mm-hmm. My wife said something to me a few years ago that altered the trajectory of my life when I was trying all these different shiny objects things. And we had already had a roadmap for success. We had a few rental properties and I was trying these random things on the side. And she said, what are you chasing? I witnessed my dad lose his job when I was 12 years old. He always had a bookshelf full of like business books, but he never really attained that kind of success. And he's always been chasing it his whole life. And when she said, what are you chasing? It just shot like a lightning bolt through me. So if I could go back and tell the younger version of myself is, to stop chasing, that you are safe, you are secure. If you just stay focused on your one thing, you will achieve success. Don't try to do 30 things. And I wish I would have known that when I was 20.
Yeah, no, that's great advice. And I want to talk about your podcast. I want to make sure we actually hit on that before we wrap up the show for the day. And tell our listeners a little bit about your podcast, when you started it and, what they can learn by tuning in.
Yeah, so it's generically called the Investing in Real Estate Podcast with Clayton Morris. So we do it 3 times a week. On Mondays, we do more of a motivational episode. I really believe, a lot of what we talked about today, forget mechanics of real estate. A lot of it is motivational, and a lot of people's biggest hurdles are the motivation piece. So I talk about that. And Wednesday, I do an episode with my wife, Natalie, where we talk about the family structure of our real estate business, what we do for tax savings, how we have our trust set up, and how our holding company talks to our LLCs that own our properties, all that kind of stuff. And then on Thursdays, we got an expert. People like you on the show. We kind of run the gamut. It's really around wealth building. And so real estate, I like to say, is the vehicle that we use, but the show is focused on financial education and wealth building. So that's what that show is all about.
Okay, very, very cool. And you've been doing that for how long now? It's been quite some time, right?
Yeah, I think 4 years now. Yeah. I've been I feel like I'm in the broadcast world.
Right,
I've been podcasting
your entire life.
like 11 years, but that show about 4 years now, 4 or 3, something like that. Yeah.
Okay, fantastic. Well, Clayton, you've shared a lot of gold nuggets here today. It's been an absolute pleasure having you on the show. But if I could ask you, if you could leave just one last golden nugget of advice or wisdom with our audience that may inspire and motivate them as they progress in their real estate investing career, what would that one last golden nugget be?
It's something my wife and I say to each other a lot, And I'm always struck by the things that I say to her that she's wicked smart, And so when she says, honey, you remind me, you said this, you say this, like that it's stuck with her, then I know I've done a good job. And it's this, which is when you make hard choices in your life, you can expect to have an easier life. When you make easy choices in your life, you can expect to have a harder life. So let that sort of stew for a minute. But the issue is, the harder thing to do is to get off the couch and go to the gym and to get healthy and eat salads and reduce your propensity to die early, right? That's the harder choice. You will have a better life if you do that. If you sit there and eat a bag of potato chips and eat chocolate bars every night and drink wine, guess what? You're going to have a harder life. So that's the way I look at it. One piece of advice for younger people, lean into those harder choices, and they might be uncomfortable, but they're going to be beneficial in the long run.
No, I absolutely love that. That's great advice. Well, Clayton, this has been an absolute blast. Thank you so much for coming on the show and sharing all your wisdom. And I wish you all the great success as you move forward in your single family career, your multifamily career, and all those other big boy assets that you're going to be looking at down the road. For those that want to learn more about you and your company, they can go visit you at morrisinvest.com. Is that the best place to find you?
Yeah, that's my website, just my last name, Morris, Morris, morrisinvest.com, or you can hit me up on the podcast. We always love to communicate with everyone there.
Okay, fantastic. Clayton, it's been an absolute pleasure. You have a great week, my friend.
Thank you, Kevin. Thanks for having me.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.